Good morning and welcome to the Daily Morning Briefing. Happy New Year. It is the 3rd of January 2017. Thank you very much for your time first thing this morning, and it's great to welcome you back after the long Christmas break. I hope you're all well rested and ready for the new year and the new trading year. Today obviously is the first day we get real big volume back into the markets. We get real a proper sense of the Christmas period being over and the markets getting back to a sense of normality with some bigger movements in terms of the overall equity markets and the volume coming back in to give us an actual proper feel of how the markets should be. So, to be honest, we come back in a particularly busy week, so the economic calendar is looking particularly busy. There's a lot going on in the next few days or so, which is going to be very interesting in terms of points going forward, and then there's still a lot to be discussed around various different bits of foreign policy and geopolitical situations which are still in the news flow. There's still some big discussion points from last year, very much like the Dow pushing towards that 20,000 level, the weakness in the euro and the strength of the US dollar, which continues as well. So there's a lot of stories continuing. A lot of the stories, as we say, are the same as previous years, but as last year, but we still know that they're going to move these markets. They're going to cause us some big movements in terms of the overall market. So we have to be very, very vigilant of what comes out today. And we could see some quite big swings in the overall market prices today as people come back in, start taking on new positions, and we get a feeling of exactly where we're going for the new year. Now, one of the real big focuses is going to be obviously China and some of the data out of there and the economy in China and the potential slowdown and how it's going to pick up over the last few days. New Year's Eve into New Year's Day, we had manufacturing PMI for December that came in weaker than expected, 51.4 versus 51.5, so that was weaker than expected. Then yesterday there was some data out, manufacturing PMI from Germany, despite there being a lot of national holidays yesterday, of course, being a bank holiday, moved over. But all of those European manufacturing PMIs came in better than expected, apart from the overall Eurozone, which was in line with expectations. So still particularly positive in terms of that reading. And then overnight, last night, we had manufacturing PMI numbers out of China, and they came in better than expected as well. And that's really helped to push European markets to start in positive territory. Asian markets ended the session in positive territory, and we're looking at that to really continue and push itself on and show us some particularly strong gains this morning in terms of Europe. And if we just look at those European markets and the index futures, and we'll just show you how they have moved. Index futures are all higher in Europe. If I show you just how the indices have opened up. Hold on one second. If I find it. World Index Overview, and this does give us a 15-minute delay price, but still you get the idea. Anyway, 54 points as of the FTSE 100. The DAX higher as well, so some strong numbers there on the open in Europe. And again, if we look at the, I can show you this on the FTSE 100, the chart of the FTSE 100 this morning, and how that's moved. We have seen a breakout of those upside levels, a pretty nice big gap higher on that movement as well from the close on the last session, which was on Friday. So remember, Friday was the last traded session of 2016, and we're now trading higher for 2017. Quite a nice move through 7,189, and we know that these are we're pushing to these all-time highs yet again on the FTSE. So we're trading all the way up 7,190, again focusing on that 7,200 level that we want to get through on the upside. We briefly broke it, 7,201 on the upside, but didn't hold on to those gains. So we'll be looking for anything to hold on above 7,200 on the FTSE 100 over the next few days or so. But as we said, it's going to be particularly busy, and let's go back to that calendar and have a little look at some of these stories that we've got coming out. As we said, overnight that Chinese manufacturing PMI has really helped to push things higher. In the next 20 minutes or so, we'll get some numbers out of Germany. We'll get the unemployment numbers. So the overall unemployment rate is 6% in Germany at the moment. That will come out at around 5 to 9 or so this morning. 5 to 9. Why am I looking at 5 to 9? It's not coming out at 5 to 9. It's coming out at 9 o'clock. Hold on 1 second. Refresh that. There we go. So we'll be looking at those. Maybe it is just before 9 o'clock this morning. But anyway, they're the figures that we're getting out this morning. And then at 9:30 we will get manufacturing PMI numbers from the UK. 53.3 is what's expected. Now we have to look towards what we're going to get this year and the big development points which are going to come out of January this year. And now January is going to be an important month, as we know. We have the inauguration of Donald Trump as president. That will be on the 20th of January. That's going to be a big deal, and all of the headlines which are made by Donald Trump are going to continue in the next few weeks or so, and going to continue for the entire year, of course. But one big thing, of course, as we mentioned in the webinar that we did just before the end of last year about review of 2016 and what to look for in 2017, that the big discussion point for the first quarter is going to be Brexit, and we've had more news from Prime Minister May with her saying, not necessarily saying, but views of the UK plan, saying that it's still in its infancy, the plan, and we've only got a couple of months until Prime Minister May said she was going to invoke Article 50. So I think there's still a lot of headlines to come out of this. Now that doesn't necessarily give us too much of a focus on the manufacturing PMI number, because it doesn't change the view that much on this. But still, there is, every time we get UK data, there is always that those people that want to say, well, this is because of Brexit, and it's because of this is higher because of Brexit, or this is lower because of Brexit. None of those things really do ring true, because remember, Brexit hasn't happened. We've just had the referendum. It's only after we trigger Article 50 and then we start to see what that means for us going forward, that we will then realise any kind of situation that is away from that is being caused by Brexit. So we look towards that number. 53.3 is the forecast. We have been moving lower over recent months. 55.5 in October, 54.2 in November, and 53.4 is in December. So now we're looking for that similar situation, for that number to come out. 53.3, again slightly lower, is the expectation, but anything higher will help these markets higher. But I think the interesting point about this going forward is the fact that the pound has been pretty resilient. There's a lot of discussion just before the turn of the year that we'd maybe seen the worst of the downside in the pound. That's not necessarily ringing true if you look at how we've performed over the last few hours or so, but we have taken down towards this lower point, these lower levels, and we're still playing around with this 100 period moving average on the hourly chart here. But the lower level at 122.68, 122.70 is where we're holding up at the moment for cable. That's giving us a little bit of a room to play around on the downside at the moment, and any break of that would target a move down to these lows here, which is 122.45, and then a move lower would target us down all the way down to here at 122.20 or so. So that would be our downside movement. So we have to look around for those levels, but remember, this is only on the hourly chart, so any breaks of these levels could give us a bit more movement and a bit more of or it could swing us, because we're getting that volume back in. But if we take this out a little bit further and look at this hourly, as we said, people talking about maybe seen the worst. We are looking at these levels down here at 122.70 as the big one to look out for at the moment. The upside big level is up here, is at 123, and again this is on a 4 hourly chart, is at 123.90 on the upside. That's our big upside level to look out for. So that's where we'd have to be with that one. But I think it's interesting to see that we've got so many levels on the downside that are going to hold us up at the moment. And this is a 4 hourly chart we're on now. You can see 22.70, 22.45, 22.20, and then 22. The figure are all those downside levels to look out for. We go on a daily chart. We then look at the level at 20.72, 20.70 on the downside, which is the big low on the downside. So we do have quite a lot of levels on cable to look out for. And if that manufacturing PMI number comes in weaker than expected, that could see us test a few more of those on the downside. And so we do have a few levels that we could keep an eye out for down there, and we could I know that you get skeptical of these sorts of things when you throw so many levels onto a chart. I mean, you almost sit there and say, well, if you throw so many levels on a chart, you're going to hit one of them at one point. But and all those who say, oh well, technical analysis is a self-fulfilling prophecy, then yeah, okay, fair enough. But if it's a self-fulfilling prophecy, that's a good thing. You want that because it means that at one point the levels are going to work. It's just where you get them. And of course, it's all about placing stop losses at the right levels, just below these levels. But remember, what I'm giving you here is not training advice in any way, and it is not the opinions of GKFX. It is the opinions of me alone. So let's move on. That's the cable chart, and that's what we've been looking at for. Guys, remember, please, if you do have any questions, please feel free to ask those. Put them in the questions pane, and I will cover any markets that you want to cover and look at anything that you want to look at going forward. So please ask if you do want those in there. A couple of people asking already for some gold prices, so we'll look at gold in a minute. Or so, but let's look at euro dollar. As we said, there's not too much in the way of data coming out this morning in terms of euro dollar, but we will in terms of the euro. But we do have ISM manufacturing data this afternoon. And let's get back to that calendar for a minute because there's no 130 figures. We do have these manufacturing numbers and German unemployment numbers from Germany, but we had those manufacturing PMIs yesterday for the eurozone, so we don't have those today. But as we move through the session, there's no 130 numbers today, but we do have 3 o'clock and 2:45 numbers. Manufacturing PMI out of the US at 2:45, then ISM manufacturing PMI at 3. So they're going to be particularly important going forward. So do keep an eye on those, because if they come out and give us a little bit of movement, it could well obviously cause us some particularly big swings. But let's go back to that euro dollar again. Over the last couple of hours, we've seen some pretty big sell-offs on the downside, breaking through a couple of these downside levels. We've got level down here at 104.13 or so, and then we'd have to look a little bit lower down here at this absolute low here, at 103.70 on the downside, and then the absolute lows at 103.50 are the ones that are opening up for us down there. So that's where we could be looking. So keep an eye on that. And keep an eye on any breaks below here, but it does get difficult on this one at the moment, and we have a couple of different. If we go back to that hourly chart, if we go back to that hourly chart, we've got this fib on the downside. Now we almost came up, so we've got 2 fibs here. So let's just take that back to the daily. You've got the 23.6%, which was respected particularly well. Now this is the high from back here in May, 3rd of May, to the lows here on the 20th of December. So those moves, we came up right up and rallied right up to the 23.6% retracement. Now this rallied up there right on the 30th of December. So this was last week. Some pretty big movements all the way up to that level. Now that coincides with this high back here that we've been looking at on the shorter term chart. Now the 100% move of that is all the way back here, but that's come off pretty aggressively, so I'd still look towards some of those levels to really start holding. But it's interestingly on the upside that we held right at that 23.6% retracement level on the upside there. So any movement back up to that level is going to be important. It's going to be for us to really remain focused on and keep an eye on any sort of trading around that level. Again, I'll write this up for you for later for the Market Insight website. I'm just going to make a note of that actually, that we want euro dollar on here. So that's what we want to look at in terms of there. If we take this away, we did have this Elliott wave movement. It's gone now. But if this starts to rally higher, we could still say it comes back in place. Remember, we had 1, 2, 3, 4, 5 in terms of the movements in there. But still, euro dollar is an interesting one for now. And I think the discussion is all about parity on euro dollar. And I mean, Goldman Sachs have already predicted parity this year. I mean, they predicted parity last year as well, but it didn't happen. But we are looking at that and looking that many people are talking about parity on these this euro dollar on euro dollar this year. So keep an eye on any movement from there. And these predictions for the start of the year are always very interesting, you know. So they don't always come to fruition, but I think it's still worth noting that the big banks are calling these sorts of moves. Let's take a look at gold. A couple of people are asking me for gold this morning. We will take a look at those gold prices. So gold and oil are both trading higher earlier on today. We're still slightly higher, but we're off the highs that we'd seen earlier in the session. This is the longer term, still 1122, 1126 on the downside are the big levels down here that we still need to take a look at. We still looked at these crosses of these. This is from last year, remember. We still looked at these crosses of these moving averages, death crosses that we talk about, where we cross the moving averages cross to the downside, the longer terms cross the shorter terms, and we do get a formation of a perfect trend. So a perfect trend line does give us price, short-term, medium-term, long-term moving averages, and that's the order that we do have them in now after this cross here. So that does say that we're still very much in a downtrend now on the daily chart of gold. So that's giving us that indication, even though we're coming higher. So it's going to be very interesting to see where we go from that. We've broken below all of these levels. We could see this 61.8% retracement level act as support around there on the upside. We do have, if we take this into the hourly chart, maybe the 4-hourly chart, we do have a bit of support here as well, which is coming in at this level, which is 1166 on the upside. So that we've got some support around that upside, and 1144 and 1142 on the downside. It's not really 1142, it's a little bit lower than that. It's down here, 1135. So you do have some levels on the downside with gold. Ignore these circles on the shorter term chart, because remember, they mean something on the hourly but not on the shorter term. They move around and it doesn't give us too much of a way of big information, you know. But so that's the movements that we're looking at. But 1126 and 1122 are the big downside moves that we really do need to keep an eye out for as we go forward with the gold price. 1166 and then higher at this 61.8% retracement level, which is up at 1172. They're the areas that we need to focus on gold. So let's look forward. Let's look at one more. I just want to look at one more chart before we go this morning, and that chart is the oil price. We are higher in terms of oil this morning, and as we said, gold and oil moving higher. Let's look at the hourly chart first of all. This is the movements that we've had, big movements to the upside. This is a very strong trend in place, still moving to the upside, coming to the high of this. So this is going to give us some resistance on the upside, which is bang in here, which is $54.48, around $54.50. That's the big level that we need to keep an eye out, and that's where we're trading at the moment. If we come back, it's going to be back to retest this 61.8% retracement level on the downside, but it's going to be interesting to see where we go from there. If you take this into shorter term on the hourly chart, still looking at this 54.48 level, but we also could look at those highs at 54.34, and again, this is a matter of just picking upsides and downsides and highs and lows, and keep an eye on those at 53.40 on the downside there to keep an eye out for, and the moving average coming in at the bottom. But apart from that, guys, I think I will leave it there. Remember, actually I will quickly show you one more chart, and that's just to show you where the Dow is in relation to this 20,000 level. We are lower, we are away from that high at the moment. This is on a 30 minutes, take this all the way into the daily. The high is still 19,991. That's the high. We've come off. We're below 19,900 at the moment. We've got within 9 points of that 20,000. But it'd be interesting to see where we do go with this. But with some data later on, and equity markets to the upside, and the index futures all pointing to. Let's just show you those. World Index Futures, where are we? There we go. So the upside, World Index Futures, we're looking to the upside for the Dow, and the Dow is looking 100 points higher at the moment for the open. So take us well above that 19,000 level. So let's look. We could be looking at that today, but we will soon see. Apart from that, guys, thank you very much for your time. Another chance for me to wish you Happy New Year. Thank you for your continued support. Thank you for coming back to us this morning. If you're coming back, or if you're listening for the first time, thanks for starting to listen to us. We do this daily morning briefing every single morning. There is another webinar I just want to let you know about, one that we recorded last year. If I just go into video articles and show you this, it's a review of 2016 and what to expect in 2017. That was something that we did last year. back end of last year. It's an hour-long webinar, gives you a little bit of a review of last year and some of the major points we need to look out for this year into 2017. But so take a look at that. That's on the Market Insight website under video articles. But apart from that, guys, thank you very much for your time, and I will speak to you again tomorrow morning. Thank you.